I invested $1 million into Tesla, and I have a massive update for you in this video on the stock and what I am doing next. Real quick, 15 seconds to remind you where I purchased Tesla. Let's watch. So I'm gonna buy here, let's see, 3,000 shares is going to be 1.2 million. So let's go for 2,500 shares, and I'm about to execute this right now. 2,500 shares. Let's go for the buy. Let's purchase right here. I'm using all the cash I got in my portfolio, and I just bought $1 million of Tesla. So I purchased Tesla at $413 per share, and I have taken a little bit of profits off of the table at $428 per share today. The reason why I sold off a very small portion and I trimmed was slight rebalancing. And as I was at a $30,000 gain in just the past 2 days from making this trade live on YouTube, I decided that after a 3% swing on this stock that I am going to take a little bit of profits, and I wanted to invest some of that into SoFi. I'm going to be making another video on SoFi because I see a little bit more momentum growth on SoFi. But I am very bullish on Tesla. I'm holding a ton of Tesla stock, almost $1 million. And in this video, I'm gonna give you an update on the stock as well as an updated trade that you should make on the stock with a leap option. So I'm gonna be discussing leaps. Now, real quick, why I still like the stock, why I still see there's gonna be a lot of momentum is that Elon Musk invested 2.57 million shares, which is like $1 billion worth, into Tesla himself. And I don't think that's manipulation at all. I think that he is finally here to get laser focused on the company's future. I am so confident in Elon Musk now executing because he has two things going for him. First of all, it's the investment that he just made, which is $1 billion. Second of all, it's the compensation package that he has. This tells me that Elon Musk is going to be laser focused and not left and right anymore doing political stuff, this and that and the third. He is now trying to focus on Tesla again. And that's what's going to make this stock a $500 stock. And this is why I personally believe that 2026 in the first quarter, Tesla will be a $500 stock. Now, the last purchase that Elon Musk made was about $10 million worth, and that was back in 2020 in February, and this time it's 100 times bigger. So he's going 100x. He literally 100x, and that means that the momentum is only going to get started. That, the insider purchase basically, which became public, plus the compensation package of $975 billion, by the way. It's almost $1 trillion. It's $975 billion if he hits ambitious milestones. And I think he will, right? If you look at some of the innovation that's coming from Tesla, by the way, they recently, this is really massive stuff, they recently unveiled in September 2025 that they started delivering the Model YL. That's a long wheelbase 6-seat version of the Model Y. And it is now in China available as of September 2025. This month as I'm making the video. This gives Tesla more product variety and tighter competition in China's largest EV market. So all I see on the road, by the way, in Eastern Europe myself, is a bunch of Chinese vehicles. So there's a lot of new purchases happening right now. The market is really booming for new vehicles. And if Tesla can be part of that mix, they are going to make a lot of money. So I'm very excited for that when it comes to Tesla. And I believe the opportunity is huge. And a lot of analysts are waking up. I mean, look, there's an analyst called Baird, Ben Callow. He upgraded Tesla's stock rating to outperform recently. And he raised his price target to $548 with scenarios, by the way, in 2035, where the stock can hit between $1,400 to $3,000 per share in the bull cases, based largely on the non-car business, such as robo-taxis, robots, FSD subscriptions. So it's really a long shot. Obviously, 2035 is 10 years from now, but $3,000 per share would be a 6x potential in a decade. And if you think about it, if you use leaps, and if you're invested in option strategies, 6x can be way more than that. It can be, you know, in leaps terms, it can be 15 to 25x, right? So there's a whole lot of money to be made on Tesla. And I want to look at the chart here. You can pretty much see here that Tesla trading at $423, I took profit at $428. It's just because, you know, right here as it was hitting a little bit highs, I want to take a little bit off the table. I'm happy. I'm happy that in just 2 days, $30,000 gains, you know, I can take a little bit off the table, you know, $3,000 off the table, and yeah, just kind of use that money and withdraw it, because I do withdraw money from my Robinhood account and I do use it to fund, you know, life. Right, so I did take some money out of the account I withdrew, and that's why you won't also see my account going up as much, because I'm taking money out continually. Now, where I see the stock heading, I think we're still going to probably reach $450 per share here in the next 3 months or so. And then in Q1 2026, I wouldn't be surprised to see the stock at $500 per share. The momentum is incredibly high, massive upswing, massive momentum swing. Again, a lot of that is part due to Elon Musk. Now, I want to give you guys a lesson on leap options real quick, and I want to show you a leap option that I would purchase right now on Tesla. So I'm going to go for next year, which is, you can go for August, September, or December. December is kind of really far, so I'm just going to stick to September. In my last video, I also went over September. In my last video, I talked about the 350 call option. That's good, but as Tesla continues to go up, you can even invest a little bit less, go a little bit higher, right? Make this more of like a call option. Now, this is not really as sensitive, right? At 350, you get 576 delta. Here, you get 67 delta. So the delta is a little bit lower. And all that means is if Tesla were to go up by $10, the option is going to go up by $6.70, okay, which is really nice. Say, for example, Tesla went up, let's just do a 5% gain, okay? 5% gain here would be about $21, $22, right? Roughly $21, $22. Okay, so if Tesla were to go up $21, $22, that's a 5% gain. The leap option is going to go up a lot more than that. So $22 times, $20 times 0.7 is roughly $14. $14, again, a $14 move on the option is pretty big because it's only 112. So $14 on 112, right? I'm just doing some back of the envelope math where we don't have to be super exact here. But $14 divided by 112, I mean, that's close to 10% return, okay? So if the stock moves 5%, the leap option moves 10%. So that's what I mean. Leap options are superior in growing portfolios. It's not necessarily cheap. I mean, you still have to buy this leap option here. The total cost is going to be $11,000. That's better than buying 100 shares of the stock, which is going to be $42,000. Okay, so leaps, super powerful, amazing strategy here on Tesla because you put in less and you get more. It's literally the best of both worlds, and that's what makes leap options so powerful. Now, this is the leap that I would be purchasing. All you would have to do is really just purchase one or two or however many fits your portfolio. Again, position sizing is important. I talk about position sizing and risk management all the time in my Discord community. That's what I focus on with my students is what position size do we take? What is safe? What makes sense? Because there is no guarantees in life. Nothing is for sure, so we always want to be balanced. We always want to understand our risk, and we always want to understand where to take profit, where to cut the position. This position specifically, this leap option, does not take a lot of management. This position you would just hold, and as Tesla continues to rise up, this leap option benefits. And I would be holding this leap option literally for 3 to 6 months. I don't see that as a problem at all, as long as the stock continues to have good momentum, right? So I would hold on to this. And look, you can also create income on a leap option. So you can generate income, not just hold a leap option and do nothing, which is also fine. You can also generate income. So I want to show you a quick video here of how to do that, how to create income on a leap option. So I'm going to explain that briefly in just a moment. And then I'm also going to show you an example on NVIDIA that I just did not that long ago that has absolutely printed a ton of money. So let's check that out right now and let's learn how to stack and make income on leap options and how to do that properly. All right, let's talk about income stack and how to stack income. Bicep over tricep money. You're going to make your leaps generate babies for you. Okay, you're gonna send out your green soldiers and they're gonna come back with more green soldiers. And we're gonna talk about income stacking using covered calls, all right? So here's how it gets spicy. A lot of the time, if I don't think the stock is going to really shoot up too much in the short term, I will sell short-term call options against my leap. This is called a poor man's covered call, okay? So I'm gonna use NVIDIA. This is a recent example that I have made. I have purchased 115 call options in my Discord community last week, and we made 20% on leaps, okay? Now, given that NVIDIA has gone up, I'm looking at the 120 call options, okay? These call options expire June 18, 2026, okay? So in this example, we have a 1-year leap, okay? The delta here is 0.76, open interest is great, bid-ask spread is amazing, and if you personally like NVIDIA, this is a great way to own NVIDIA, again, using less capital up front with the leaps approach. But now, let's talk about and learn the strategy of selling a covered call option on a leap option, okay? A leap option, given that it has high delta, it's in the money, is going to look similar to a stock. It's going to look very similar. It has the same kind of upside in many ways because it's going to be very sensitive to delta. So if the stock goes up $1, this leap option will go up 76 cents. So given that, we can actually sell a covered call. Since our leap option looks similar to stock, we can sell a covered call on a leap option. And this is called a poor man's covered call because it's a cheaper way, it's kind of like a back door into a covered call without having to really own 100 shares. You own 100 shares kind of via the call option, all right? So you don't have to, or you don't need to own 100 shares to sell covered calls. The leap option actually covers the sell call option and substitutes for the 100 shares that you would normally need to own in order to cover your call. How does that work? Well, let's say that you get assigned on your sell call option, then, well, this obviously depends on your broker as well. So I'm using Robinhood, you can use Schwab, you can use Fidelity, you can use Interactive Brokers. Yeah, all of that is fine. And normally your broker will automatically exercise your leap call option as well. So if it goes into the money, they'll typically close out both positions because they will recognize that the leap option is essentially a call option, right? And it's essentially 100 shares. So they're never going to kind of leave you high and dry by, it may happen, which is why we'll talk about managing the trade. I would never even leave it to the broker. So real quick, the broker will likely close out the position together. They will realize that it's a poor man's covered call. However, you just always close out the trade, and I'll show you why it's always profitable essentially to close out the trade. The only risk you have, you would always be taking profit anyway, so you never really have an issue. Let me explain to you using this chart, okay? Let me zoom in here. So look, let's say that you bought NVIDIA, right, this call options at 120, perfect. So 120, right? And then let's say that you sell a 140 call option, all right? So the 140 call option, we're gonna go to sell. And what you want to do is you don't want to sell it for June of next year. You want to collect income along the way, right? So you're going to sell a shorter term call option. Now, you're welcome to do it 30 days. You're welcome to do it 60 days or 90 days. I think all of that is perfectly okay in that 30 to 90 day window. I'm going to go for kind of like that middle amount right now in this example and show you a 60-day to expiration option, all right? This is like not monthly income, but it's income every 2 months, and it's freaking great. It's great. So say that I think NVIDIA is gonna rise, but you know, it's gonna rise steadily to 150 over the next 60 days. So then if I think it's gonna go to 150 and not that much higher, I'm gonna sell the 150. And notice here in the chart, okay, I'm gonna zoom into this chart right now. Notice that it looks great because you're gonna make money even if it overshoots 50, but a little bit less money, right? It's gonna go down, but you're still in the green. And that's because the leap option that you have is very powerful, has a lot of delta, so it's increasing very fast in value. Whereas the short call option here, I mean, NVIDIA would have to go above 150, and even if it continues to go up, you're still making a lot of money on the leap option, but you're losing some money on the covered call that you sold, but you're still gonna be net positive. So if it goes to 150, just close out the trade. It's really as simple as that. You just close out the trade and you're like, hey, I'm done. And you're gonna make really, really fast, easy money.